All right, good morning everyone, and thank you for joining us for the 2025 North Dakota Transportation Conference. We're excited to have you guys here today to explore the latest advancements, challenges, and opportunities shaping the transportation future here in North Dakota. Before we get going, I just want to remind everyone, please turn off your cell phones so we're not disrupting the presentation, and please hold questions till the very end. Without further delay, it's my pleasure to introduce Paul Myklebust today. He'll be discussing FAR Part 31 contract costing. Give it up for Paul.
All right, thank you, Ron. Appreciate it. And he made sure he checked how to say my last name because it can be a little tricky sometimes. But welcome to FAR 31 Contrast Cost Principles and Cost and Principles, a far out review. We are here to seek the truth out there regarding certain costs within government contracts. I am your presenter, Paul Myklebust. I'm with the NDDOT Audit Services Division, where I am the external auditor. I grew up in a small farm near the big town of Starkweather, North Dakota. Moved to Dilworth, Minnesota after my 7th grade year. From there, I attended Mayville State University, where I majored in business administration and with a minor in accounting. I started working with the state in July of 2011 as a bank examiner with the DFI. Did that for 10 plus years and then moved over to NDDOT in April 2022, where I'm currently at. All right, just wanted to touch on, this one doesn't follow with it. Okay. Just wanted to provide a brief agenda overview today. We'll get into what is FAR, or FAR 31, also contract cost principles as they apply to the treatment and measurement of costs within government contracts. Go through specific areas of cost and how they are applied. And we'll discuss our NDDOT's review process as it relates to the treatment of these cost principles. So you're probably wondering by now what in the world is FAR. It's probably not as exciting as maybe it sounds, but FAR is an acronym that stands for Federal Acquisition Regulation. FAR is the primary regulation governing the acquisition of supplies and services with federal funds. FAR is codified within the Code of Federal Regulations, known as your CFR. Overall, FAR contains 53 parts, which cover all aspects of government contracting. For purposes of this review, I'll specifically be discussing Section 48, Part 31. Industry-wide, we just call it FAR 31 or Part 31, so you'll hear me reference that throughout. And of course, this specific area mainly applies primarily to architectural and consultant engineering firms. FAR 31 covers areas of cost and how they may apply to contract pricing. Essentially, FAR 31 is accounting guidance. However, it does not fall under your standard financial reporting as standardized by generally accepted accounting principles or GAAP. As I mentioned, FAR covers all aspects of government contracting. Catch that one there. For NDDOT engineering consultants, if you are looking to contract with the state, our negotiations actually lie with a different division than what I'm at. It lies with our environmental and transportation services, consultant administration services area. That's, you work with Chad Taylor over there, and Andy Iash and those folks over there. My role in the audit services division is just to ensure the accuracy of costs that are placed within these contracts. Okay, so engineering consultants maintain compliance with FAR 31 by submitting an indirect cost rate report. Consultants are responsible for putting together their indirect cost rate calculation. That calculated rate is used within billings on the government projects. Consultants or often CPA firms present this report built around the calculation of costs and explanation of these costs. An indirect cost rate is made up of direct and indirect costs derived from general ledger and cost accounting system totals. Within indirect cost reporting, there is a schedule that shows the calculations of their indirect cost rate or overhead rate. I guess this example, I don't know if you can see it very well, but let's see if I can grab this. So this is kind of a indirect cost rate schedule, just a kind of a short version of one here. But here is your indirect cost rate within here. So the formula here is total indirect cost divided by direct labor costs. You get you your indirect cost rate. In this example, it's 127.63%. So you take, and this is this total fringe benefits and general overhead. That's your total indirect costs. In this case, 2.5 million. That number again divided by your direct labor costs up here, 1.95 million listed out as a percentage. You get that figure there. That's kind of how they work. Here's some of your indirect cost totals derived from this section right here, and your direct labor is strictly that line right there. Important to note here too that so when we're looking at indirect cost rate schedules, it's usually based, or it's always based on the prior year fiscal year costs. This is basically to ensure that they are based on actual costs and not estimated costs. So as I touched on in the previous slide, direct and indirect costs make up the indirect cost rate. Well, what are direct costs? Direct costs are costs aligned specifically to the contract or project. Typically, these would include your direct labor costs, materials that are included in your contract, and reimbursable expenses incurred during the project. Indirect costs are, of course, costs not directly attributable to the project. Examples of these would include, as you saw on that previous slide, fringe benefits, your general administrative costs or your overhead costs, and indirect labor costs. And we'll go through some specific examples of these in future slides. But again, your indirect costs are typically your overhead costs as part of them anyway. One little, I guess, caveat here is there may be instances where if a firm normally bills directly for mileage or meals or supplies, and they, for whatever reason, in the particular contract associated with part of the calculation, if they're not included in the contract, and they typically do per their policy, those costs could not be allowed as an indirect cost either. So consistent usage of costs must be applied. So there are certain traits we look for in a cost to ensure that they can be included. Oh, I'm sorry. FAR 31 says costs must be allocable, which is assignable or chargeable to one or more cost objectives. A cost would be allocable to a government contract if it was incurred specifically for the contract. Again, direct labor, equipment, supplies, travel. Benefits both the contract and other work and can be distributed in a reasonable proportion to benefits received. And is necessary for the overall operations of the business. Typically, again, those are your overhead costs. We'll talk a little bit about reasonableness. FAR 31 also states a cost must be reasonable. If it's reasonable, if in its nature and amount does not exceed costs incurred by a prudent person in the conduct of competitive business, is recognized as necessary and ordinary within the course of business, follows generally accepted business practices, including arm's length transactions or bargaining, follows federal, state laws and guidance, ensure that the contractor is following its public responsibility to the contract, and is within the contractor's established practices. One example, I guess, auditors or firms can use to test reasonableness is there's a national compensation matrix tool out there. I'll talk about that a little bit further and show an example later in this presentation here. Sometimes these are, I guess, hard to test with like an actual tool. You just kind of just compare each cost as you look at them. So allowable. So two of the bigger determinations FAR 31 requires would be the allocable and reasonableness that we talked about there. For costs to be allowable, they must also be adequately documented. Is there enough detail to support the cost for a determination on allowability? Are your timekeeping records very solid? Labor distribution is properly tracked. Travel, are your mileage logs, hotel receipts, those type of things, are they maintained for supporting documentation, and invoices maybe for supplies. To be allowable, they must also meet the terms of the contract. And again here, to be allowable, they must, the underlying financial reporting practices, such as like your general ledger and your financials, must follow GAAP, even though FAR itself is not a GAAP form of accounting. So that's more like our accrual, like cash basis is typically not allowed. We like to see accrual. That's kind of more of a GAAP form of accounting. So, and then also, obviously you must comply with the FAR requirements. Now we've discussed what those are to be allowable. There's also unallowable costs. If a cost cannot meet these objectives, it would be determined unallowable and could not be charged to government contracts, even incurred as part of normal business operations. So let's talk about some specific costs here. Labor costs are the most significant costs incurred by engineering firms in the performance of contracts. Engineering firms must maintain a sound labor accounting system to appropriately track labor costs, as these costs are considered a higher risk area. Typically, they're not supported by traditional third-party documentation, but rather by reporting by individual employees. Sound internal controls are an important part of this system as well. Therefore, critical employees are accurately recording their hours when documenting this cost. Employees should be well versed in the importance of time card preparation, whether automated or manual, through written timekeeping policy, training, constant training, or management reminders, constant staffing reminders, whatever it may be. Supervisors should also be approving and co-signing all time cards to ensure charges for direct and indirect labor are assigned to the appropriate cost objectives. If you recall in that indirect cost rate example previously, direct labor cost was our denominator in that formula. There is other allocation bases that could be used. Direct labor is the most common and really the only one that I see, I guess, around here. But and the reason for that is simply because labor is most often the most significant part of contract performance. So, let's talk about some other selected areas of cost. FAR 31 specifically lists 52 selected areas of cost where they further define allowable and unallowable criteria. I'm going to go through a select few of these I got listed here. And we can kind of talk about maybe some examples of what would be allowed or unallowed in those situations. Compensation is a large cost that includes wages, salary, bonuses, deferred compensation, employer contributions to defined contribution plans, all factor into your compensation. Allowable compensation, for compensation to be allowable, it must be for work performed in the current year of calculation. Back pay from a prior year would not be allowable. Bonuses can be included for compensation. However, bonuses must be tied to a written plan, which demonstrates that bonuses are tied to performance and are part of the established practice of the firm. Bonuses simply for, we see this occasionally, simply for length of employment cannot be the sole reason an employee is eligible for a bonus. However, it could be a factor into why you get a bonus or how much you get a bonus for. Again, that should be tied into your bonus plan as part of your criteria. Fringe benefits are allowable compensation. Those include your annual and sick leaves, your holidays, military, bereavement, jury duty, those type of things. These are allowable to the extent that they're reasonable. Benefit costs, or fringe benefit costs, of course, as we mentioned before, are indirect costs. Unallowable compensation costs include distribution of profits and unreasonable compensation, which usually means excessive compensation. Additional compensation guidance also requires top executive compensation to be closely looked at. So typically that is analyzed separately. And AASHTO provides a tool, which I had mentioned before, that National Compensation Matrix tool, for firms or for firms or CPA firms to test that reasonableness of the compensation. I'll include a snip here of what that tool looks like here. So just, I mentioned AASHTO. I just want to touch on them briefly. You'll hear me mention this acronym a few times now. But AASHTO is the American Association of State Highway Transportation Officials. And I'll discuss what they're about a little bit further if you're not familiar with them. And they provide this national compensation matrix tool to use to calculate or for comparison for total executive compensation. So just want to touch on this a little bit here. So this tool kind of provides benchmarks. This tool, as you can see here, provides a listing of key executive positions. They also come up with benchmarks for computed compensation for each of those key positions. There's also within this tool, and I didn't include it on this snip here, but they also provide position descriptions, or descriptions of what each position would kind of fall under, what defines that position. So typically a firm or CPA firm should be mapping these positions to individuals in your firm. And again, this happens once in a while, but sometimes some firms say, well, we have 2 presidents. Well, unfortunately, this guidance says you cannot have 2 presidents for the purposes of this here. But again, okay, I just wanted to, yeah, okay. So these benchmark compensation, this includes like benefits or bonuses, benefits, those type of things within that as well. This tool here up here, the gross revenues, you can change that. It should match the firm. So for this example, I just pushed in 25 million. Kind of a fun fact with this here, there is a statutory compensation cap of $646,000 for presidents, and that is because the highest making earner in the consulting firm can't make more than the President of the United States. So there's your president's salary right there as well. So. All right, let's touch a little bit on uncompensated overtime. This is when employees work beyond a standard 40-hour work week, but are not compensated for that time. Typically, that's your exempt employees or your salaried employees. However, it's necessary to account for this overtime, to account for these amounts of direct labor costs. Consultants should document that effect of uncompensated overtime, and there are 2 common methods to account for this. The effective rate method and the salary variance method. And I'll try to touch on just some basic examples here, but the effective rate method, if you have an employee that has a salary of $2,000 per week, works 40 hours, that individual makes $50 per hour based on that math. However, if that individual works 50 hours under the effective rate method, that does change their hourly wage to 40. So under the effective rate method, you're going to bill at the $40 rate per hour versus the 50. The salary method works a little bit differently. Salary variance method, I'm sorry. So what you do here is you estimate your work hours for the year. So 2,080 hours is your standard 40 hours times 52. In the example of a salary of $2,000 per week, you get an annual salary of $104,000. Let's say that individual actually works 2,200 hours. That comes to, at $50 an hour, that comes to $110,000. What you get there is between your estimated and your actual, you get a variance of $6,000. So you've actually billed for all those hours, 2,200 hours at $50 per hour. With the variance, you can include that in direct labor and indirect labor, so we would take that $6,000 out of your indirect labor calculation. Again, it's a little tricky to, I guess, kind of see, but that's kind of how those work in a simplified way. Related party costs. Again, we're going to get back to some of the specific costs here again. Related party costs. Transactions that are related to the contractor, such as affiliates under common control or ownership. Related party costs, of course, must be at arm's length. Typical related party transactions that we see are related party rent. That's almost see that every time in the firms that I work with. Related party rent is allowable. However, it is limited to the cost of ownership, such as depreciation, taxes, insurance, and maintenance. And additionally, related employee compensation must be looked at. Employees or firms should provide a list of all employees that are related to company executives. That list should be reviewed and should be shown how it is comparable to other positions. Your title, experience, education, training. Kind of got to justify their salary to make sure that it is reasonable. It's not, they're not getting unfair treatment just because they happen to be related. Additionally, related vendor costs should be comparable to market prices. All these costs, again, should be adequately documented to show reasonableness. So within an indirect cost rate schedule that we get, or report that we get, you'll see a related party rent section that details out all those costs and then justifies the amount of rent that could be allowable. Same thing with, again, related employees. We might see a different work paper that lays out positions and how they compare to others, or maybe even like market and stuff like that. So that's kind of what we see here. Public relation and advertising costs. Again, these costs are allowable, but depends on the activity. Allowable costs include ones that are required by contract, communication with the public engagement. Oh, I'm sorry. There we go. Engagement with customers, stockholders, or participation in community services activities. Those are all allowable costs. Unallowable costs would be promotional activities and materials, trade shows, meeting or seminar sponsorships, souvenirs, imprinted clothing, and any other mementos provided. Those would be considered unallowable. A few more here. Selling costs. Again, selling costs are allowable if they are for direct selling, person to person for specific products or services. Documentation must show who the consultant was meeting and what was discussed. Additional allowable costs include your bid and proposal. Those are probably pretty common as well. Advertising costs here are mentioned here as well. And again, those are subject to the provisions noted on the prior slides. Sometimes these costs do kind of cross under each other a little bit. So. Unallowable costs include just your general marketing costs. You cannot be included in your indirect cost rate. Recruitment costs, again, typically allowable, with some examples being advertising for specific job positions, travel costs for employees engaged in recruiting, or travel costs for interview applicants. Sign-on bonuses are allowable, however, subject to documentation and the firm's standard practices. So. Unallowable recruitment costs include general recruitment costs, job fairs, or costs for positions that don't tie to a government contract. Travel costs. Travel costs for lodging, meals, incidentals can be allowable, subject to they are adequately documented and reasonable. Adequate documentation means the costs must be documented to the extent that anyone can tell the reason for travel is allowable, including your reason for travel, what conference or training event were you attending. Preferably, we'd like to see agendas tied with that, or simply receipts and stuff like that. Unless agreed to in a contract, lodging and meal rates should be comparable, or really should not exceed the per diem rates set forth by the GSA, General Services Administration. And that's, I think, typically a lot of times you'll see that tied in the contract as well. But costs that exceed those would be unallowable, as well as costs maybe not documented adequately. Exceptions, maybe if you're at a conference at an expensive hotel that you got to pay $200 a night for a room. Those could be probably allowable, given the situation there. Training costs generally allowable if they're related to the field the employee is working. Also, memberships in professional organizations and subscriptions to professional periodicals are allowable. One little caveat, if you have stuff that's related to lobbying, lobbying is an unallowable activity for the purposes of indirect costs. Overtime compensation, if related to training costs, is unallowable. I don't know how often that occurs, but it is mentioned in there. So. Some other common ones that I see here: costs incurred in connection with organization or reorg costs of corporate structure, including merger and acquisitions or raising capital, are actually unallowable. Typical specific costs associated, those would be like your legal fees or consultant fees, cannot be included. So FAR 31 also lists specifically or expressly unallowable costs. Really, there's no way around these, but entertainment costs, you cannot be included in your indirect cost rate. Government says you can't have fun. Unfortunately, alcoholic beverages cannot be included. A common area you might find that is on a meal receipt. If you see alcohol purchase on a meal receipt, unfortunately, we have to take that out of there, so, based off the FAR 31. And these other ones here: bad debts, contributions, lobbying. Interest, if you have a loss in another contract, you can't recoup it through your indirect costs, and fines and penalties. So we've kind of discussed all those costs and instances where they may apply to an indirect cost rate. I just want to shift a little bit towards NDDOT's process for verifying consultants' indirect cost rates. Engineering consultants would submit their indirect cost rate proposals to their cognizant agency, which is typically their state transportation department. That's the state DOT identified is where the consultant's accounting and financial records are located. Should a consultant maybe do more work in another state, DOTs can transfer or delegate their cognizant responsibility to another state. So that's kind of just a little underlying piece of what a cognizant agency is. So at NDOT, here at NDDOT, we do have submission requirements. Our role as a cognizant agency, we are responsible for ensuring compliance with the FAR 31. If you're a prime consultant that has cumulative contracts of $250,000 or more over a 12-month period, NDDOT requires that you get a CPA audited indirect cost rate. What we do to review those items is we require initial review. We require an audited indirect cost rate report, financial statements, preferably audited, so we can compare those underlying figures. An AASHTO internal questionnaire is also filled out. An AASHTO CPA review work program, which is like an audit work program, and a management letter for our initial review. So with that, upon that, once we've received that initial documentation, we perform a risk assessment. This assessment helps us determine if we wish to further review the accuracy of the cost rate, or more CPA work papers, or just accept the rate. Depending on the level of risk that we identify, I'm sorry, I gotta switch to ads. Okay, here we go. Again, depending on the level of risk that we identify, we typically utilize 3 options. And this isn't standard across every state. This is just kind of what we do. But most states are maybe similar, but maybe not exact. Anyway, we may choose to accept that ICR as submitted without further review. We may perform more detailed reviews we call limited reviews or cognizant reviews. In the event we perform a limited review or cognizant review, we would actually request additional documentation, again, such as more CPA work papers or reports directly from the consultant. We're going to look into costs that have the greatest impact on the indirect cost rate. Again, probably, labor costs is always one of them. And we're also going to make sure that the CPA is following their auditing standards as well. They must follow government Yellow Book standards and industry guidance related to FAR 31. So once we've completed that review, we'll discuss any recommendations and or adjustments to the indirect cost rate that we may have. and then issue an acceptance letter. Acceptance letter can be used by the consultants as proof to other state DOTs that their cognizant agency has accepted their rate. Most states will accept that letter as proof that their rate is compliant with FAR 31. If you're an out-of-state engineering firm, for us, we ask that you submit a letter from your cognizant agency, and we'll accept that and maintain that for our records. Again, once that review is finalized and accepted, the consultant may utilize that rate and kind of continue negotiating contracts with our ETS Consultant Administration Services team there. Again, Chad and Andy and Joy. All right, again, I've mentioned AASHTO a few times again, so I just want to talk a little bit more about them. But AASHTO, again, stands for the American Association of State Highway and Transportation Officials. They're an association of highway and transportation departments, represent all transportation modes, play a critical role to educate the public on the importance of transportation. AASHTO serves as a liaison between state DOTs and the federal government when differences arise. I think one current issue is we've been noticing some firms are saying that they have more than one cognizant state, so they're trying to attempt to get maybe multiple letters with maybe different rates on them. So we're trying to kind of iron that out and maybe get that guidance handled a little bit more. So we're kind of working with the federal government on that. So that's some of the, maybe an example of what would happen in that situation. Again, one of the many areas where AASHTO provides assistance for us state DOTs, they actually have created a uniform accounting and auditing guide. It's actually an industry-wide guide designed to provide general guidance to assist users with terminology, policies, audit techniques, and a source for applicable regulations. It's about, if you pin it on paper, it's about that thick. So there's a lot of information in it. So, again, the guidance does not supersede FAR, and it's actually not required to be used, but essentially it's heavily used among state DOTs and CPAs that perform these indirect cost rate overhead audits. All right, I've just want to provide you a couple references here on some of the items I kind of covered today, but again, there's an AASHTO link right there. You can if you want to take a little bit more look at that NCM, you can find it at this link. I had mentioned that internal control questionnaire. I am sorry. Got to do both. If you want to, again, let's see. That internal control questionnaire that I had mentioned, you can take a look at it there. There's quite a few questions on that that are asked. There's your link for FAR Part 31. If you want to read all that exciting accounting guidance there. It gets kind of hard to read sometimes, as most accounting guidance does, but definitely have to reference it. So it's a useful. I'm on that one quite a bit. So, and then NDDOT, we have a specific link for consultants and engineers that kind of helps them submitting their information or kind of walks through maybe our contract process, or if you're looking to contract with NDDOT, there's some information on there if you that you find useful, or I think there's even some contacts on there as well. So, but any questions with any of that? Anyone? Yes.
On smaller firms, typically sub-consultants that don't have a formal audit, is there guidance maybe to the youth manual? I'm not sure, but I know that's always been a question in the past on when they have to. Is it that $250,000 threshold we talked about earlier, or is there other guidance?
I think so. There isn't. We don't have much more guidance on the sub firms. I know if you're a sub-consultant firm, we could ask for a look at your indirect cost rate, but we typically aren't going to require the audit rate if you're a sub firm. If you're looking to do prime work with the state, then and you have that $250,000 or more in contracts, we do ask that you get that audited rate. So, and sometimes we'll give like a 1-year leeway. There's a safe harbor rate that's out there that we sparingly use. If you don't happen to have an audited indirect cost rate that we could negotiate to use for 1 year. But then if you're gonna continue to do work, we're probably asked that you do that audited rate, so. But I'm not sure we have anything specifically that states that out there, but,
I don't think we do. One thing to note is if you do have an audited rate, which I don't think is exactly the question here, but I think it's a good point to note. If you do have an audited rate, even if you are a sub-consultant, you have to use that audited rate. It's a little bit different here, but that's one thing. Like Paul said, if you are a sub-consultant and you are billing an indirect cost rate to another contract, we could at any point ask to look at that, but we do not have any requirements that it be an audited rate for the CPA firm.
hopefully I appreciate that. Any other questions? That's a good question, actually. So that, we do talk about that occasionally, so, and we have looked at some of those once in a while, so. Yes?
With that $250,000 threshold, there's not a lot of projects coming up this year with the transportation bill. How do you guys look at that when consultants bounce around right around that threshold and under
Ooh.
for a couple of years, and then when do you make them get an audit again? And how do you do that? How would you prefer to see that?
That's a, I'm not sure I'd answer that one, actually, but,
That $250,000 threshold, what I'm looking at, we've got a project we're going after, it'll probably be the only one this year that's gonna be under that threshold. Just due to the amount of funding that's available in projects. How do you guys deal with that when the consultant, sometimes it's over, sometimes it's under, maybe they're looking at a couple of years where they're gonna be under?
You know, we've never really come across that, so we might have to talk to you later. I agree, I'm not exactly sure. But it would, we probably look at it on a project-by-project basis. Then, in the case that you're gonna be under, I'm not sure. We might have to speak later.
do you, is it something where, are you getting an audited rate currently, or have you been?
Yeah, we have it.
Do you plan on continuing to do that then, or is it, okay, so I mean, we'd probably prefer that, to be honest with you. I mean, I know it gets technical with that 250, but,
There's a cost to doing that.
Yes, there is, yeah.
Outside firm, and if we're not
Sure.
gonna be getting a project, we're throwing money away.
yeah, I see it, yeah. Yeah, that's a good question.
Might have to touch base with you.
Yeah, because obviously if you're not doing government work, you're probably not getting an audited indirect cost rate, so, yeah. Oh, yes, Susan.
What's the difference between a cognizant letter and an acceptance letter?
So actually, they are the same thing, actually. But a cognizance letter, so a cognizant review is like a full review of all CPA work papers or all reports that make up that indirect cost rate. So it's a lot more detailed, a lot more in-depth type of review. So a cognizance letter, I guess, is kind of considered the strongest form of assurance for an indirect cost rate acceptance. There may be a couple states out there, we aren't one, but there may be a couple states out there that actually require a cognizant letter, and if they don't have one from another state's DOT, they'll probably do their own. So I don't think there's many of those, but there might be some out there that do that, so. Yes?
Question, sign-on bonuses are acceptable, how about like tuition reimbursement that's tied to a certain employment criteria after they graduate?
I think specifically tuition, I don't think that's allowable, actually.
I think it depends, I might have to go back to the farm.
Yeah, let me check that on here.
I think it is allowable if it is tied specifically to a position that's required.
Okay, sure.
Yeah, but I'd have to double check. I mean, definitely reference, I'm pretty sure it's actually reference.
I think it is too, actually. I just can't remember specifically, but, anyone else have any? Oh, yes.
I have
yes.
one other question.
You bet.
Not to get too far in the weeds, but earlier, I think you mentioned that from the far out standpoint, the preference is accrual accounting versus cash accounting.
Yeah.
What's the major difference, if there is one, on how the far out looks at the cash versus accrual?
Yeah.
Why do you say that?
Sure. So if you're making, so like a cash basis, you might have one large expense that you just maybe pay. Let's see, try to think of a good example for you here. So expenses that are paid with cash may be included, maybe expenses for another year. Whereas accruals, you're accruing them over a month period, and that can match your year. So that's kind of the difference there, if that makes sense. That's one example I think that we've seen anyway. So a lot of times, cash, you're paying year-end expenses. You might be paying them in January of the year, and those expenses are actually for the prior year. Shouldn't be included in there. So. Yes.
I have one more question.
Yep.
So you said that overtime, uncompensated overtime.
Yep.
Do you have an issue with that hasn't been very well documented, right? If you're on salary, you're on salary. Did they really document how many actual hours they worked?
Oh, absolutely. Yeah. That's part of, you'll see very detailed work papers on that. And that's why the firms have to have really good timekeeping records, because that is very, very well detailed and broken out as part of the calculation there. So, yes. Yep.
Back on the cash accounting, FAR allows cash accounting for smaller firms. Do you know what that threshold is for when you're no longer a small firm?
I don't. I wasn't aware of that, actually. In the FAR 31, it states it must follow GAAP principles, is what it states there, so.
Yes, but it also allows for smaller firms to stay on cash accounting, just because it works well for some smaller firms.
Sure.
But it is preferred, but it is also allowed.
Let me look that one up for you again there. So.
I know because we're on cash accounting, we've been doing it for years.
Okay, sure, okay. Gotcha. And it may be something, internally, we don't have anything that we've set for a threshold on that, I guess, but. Yes?
Going back to the earlier question, we're here having Jeremy had said, on the subcontracts, on subconsultants, do you allow prime consultants to use subs and sometimes don't have an audit and negotiate a rate for a particular contract?
Yeah, typically we do. I guess sub doesn't have to have the indirect, or it doesn't have to have that audit rate. But if they are including their costs, they should have some kind of rate that is input. So typically that consultant will just have their own calculation of it. So that is included within the prime contract, if I'm not mistaken, right, Chad? Is that?
Yeah.
Yeah, that's.
Does it become non-applicable if they just have a lump sum contract rather than now they want it to be billed on a cost basis?
That's.
I guess that's kind of handled at a case-by-case basis, depending on like what the sub-consultant's doing. Like testing or something to that extent. I have seen like lump sum for employees and that type of thing. It counts all that, but we have to make sure like billing and everything that they're billing for actual wages, like all those things match what we proposed. So it's more of a case-by-case basis for that. But like going back to his indirect rate for a sub, we do look at all that for in contracting phase, but if it's reasonable, we'll accept it. But if it's something that we think need to be looked at, we'll request like additional documentation or review for that, how that rate is calculated. So I guess that's kind of for that. Does that help? Yeah, no problem.
Thanks, Chad. Chad gets more into Chad's more the contract. I guess I just got kind of dig into the numbers a little bit. So, but yes, Jody. Yeah.
Putting business cards, so
Oh.
reach out to you.
Yes, I'll throw some out here if anybody wants some, and I do want to follow up for sure with these two gentlemen here. There's a couple other questions. So, anybody else have any questions? All right. Well, I appreciate everybody joining. Thank you. I hope you learned a little bit today, anyway, and thank you all. We appreciate it.